Let's take the note of Mr. Avinnash Gorakssakar as well. Avinnash Gorakssakar from Mumbai BSc studio. Mr. Gorakssakar, I'm talking about this corporate earnings in the September quarter. Well, many analysts still believe that the corporate earnings might not change. Even Mr. Mittal was mentioning that there will be the same story almost. Even do you see how do you see the complete corporate results picture in this quarter? Because there are certain demands, certain challenges in the complete sector as well. So basically, it is appearing to be down now.
No, I think Venkat, as Mr. Mittal mentioned, I think the Q2 numbers are going to be disappointing like the first quarter, and I think except for some bright spots like FMCG or for that reason pharmaceuticals or IT companies or typically media companies or telecom companies, I think if you leave alone these sectors, most of the rate sensitive and cyclical sectors, if you talk about metals, if you talk about public sector banks or maybe real estate, construction, capital goods, I think these are all sectors which may not show a very strong improvement in the earnings trajectory. Clearly, demand on ground is yet to improve, and I think if you talk about volume growth, most of the companies which also benefit would obviously also benefit because commodity prices have continued to remain soft. So probably you will see top line growth being a little muted or softer, but profitability, for some sectors improving sharply because of the softness in commodity prices. But overall, my sense is only after the December quarter we could see some impact of the rate cut coming in and possibly demand getting again boosted across the rate sensitive segment. So except for auto components or pharma or IT or typically some media companies or telecom companies, I think the overall mood in the market is going to be quite disappointing because earnings growth overall for FY16 is going to be quite slow as compared to last year. So probably FY17 is only going to be a year when the earnings growth trajectory will be quite strong.
Avinnash, are there any factors apart from this RBI rate cut impact that we see after the December quarter? Because what exactly you feel are those factors that are impacting the corporate results? We were talking about the profitability, we are talking about the volume growth. Everything have reasons to be impacted. And financial year 2017 you say could be positive. On what basis do you see that financial 2017 could be positive and financial year 2016 could be on a mixed note?
So I think first of all, I think if you look at FY16, the second half is dependent on the fact that what is the kind of government spending on specific projects, and clearly what has been the status of uncompleted projects as far as infrastructure and capital goods is concerned, because these are the two main sectors which would actually drive GDP growth. And my sense is, I think if you look at the performance of large players like BHEL or a Larsen & Toubro, I think clearly order book inflow has been quite muted in the first two quarters. And even in the second half, I think it all depends on how quickly projects are processed, how quickly new corporate activity happens on the ground. So overall, FY17 will be a good year looking at the kind of rate cut, which obviously should boost capex investment, from next April, onwards. So that is the reason FY17 now looks to be a better year compared to FY16, which hopefully only after December some revival could be seen.
Okay.
चलिए तो फिलहाल वक्त छोटे से ब्रेक का है. ब्रेक के उस पार आकर जानेंगे कि जो बैंकिंग काउंटर्स वो फोकस में क्यों है, साथ साथ फार्मा के जो शेयर्स है उनकी क्यों पिटाई हो रही है. आप जुड़े रहिए बिजनेस मॉर्निंग के साथ.